Hi, my name is Joan Veon. I'm the Executive Director of the Women's International Media Group in Maryland. I'd like to thank you all for coming. This evening we're going to be discussing the continuing changes that are occurring in America to our country, to the structural system of government, and to the debt that you and I as taxpayers will be responsible for. America, as we know it, is in the process of changing. The role of Congress and the position of Congress is changing. The amount of debt that we as Americans owe through the Federal Reserve and the Treasury system is increasing. The elimination of the final barriers separating all the countries of the world from world government is at the heart of the credit crises. It is one thing to read history. It is another thing to live history and to respond to change. I trust that this video and the information will provide you with the understanding necessary for you to make provision before the subsequent changes to these changes occur. So with that, please join me as we take a look at when central banks rule the world. I didn't expect to have a set of 3 videos to overlie and to interconnect, but that's exactly what has happened. In May, before anybody ever knew what was going to happen in September and October, I filmed the video 21st Century Feudalism, in which I looked at the powers and the players who control world government. Then, with regard to the credit crises, in September and October, I filmed the 2008 credit crises, looking to understand what was happening. We are in the middle of major change. It's called creative destruction. We all know banks are in crises. At the heart of banks being in crises is a document authored by Treasury Secretary Hank Paulson called the Department of the Treasury Blueprint for a Modernized Financial Regulatory System. Let's take a look at the 2007 to 2009 credit crises. First of all, it is historic. It goes back to 1929. It is a conduit worldwide to where banks will rule, central banks. It is structural, changing the world of nation states to a system in which we are all interconnected. And finally, there's structural change, changing the Constitution and the mandated balance of power that we have known as a country since our forefathers set in place the balance of government. So, when central banks rule the world, from Bretton Woods I to Bretton Woods II, many think the world is ruled through governments. However, it is central banks and the power behind them that rule the world. The global credit crisis is how the remaining wealth and power will be transferred. Many think the world is ruled through governments. Central banks, which are private corporations, began lending to governments in the 1600s. The tearing down of the barriers between countries started in 1944 with the first Bretton Woods meeting. 65 years later, one barrier stands between the countries and an opportunity for the central banks and international bankers to seize control of the world's assets. Actually, we are now talking national regulatory barriers being torn down. And in fact, it is so important that the national regulatory barriers be torn down that a Rothschild, Sir Evelyn de Rothschild, was on TV in February to talk about the fact that national barriers had to be torn down. That he said each country must face up not to just regulation, but teaching banksters and investment people that they have to work within prescribed limits. We can't do what we have done in the last 10 years. We must have regulation. Now, in order to understand how important this was, the Rothschilds as a family are very secretive. You basically don't see them on TV. You basically don't hear about anything with regard to them, their business dealings, or anything that they're involved in. And so for Sir Evelyn de Rothschild to go on CNBC like he's just a normal person, which, if you understand the history of the Rothschilds, which is part of my video, 21st Century Feudalism, you will know that this was very unique, that he was even on TV. At the time when President Obama was coming in, we have Paul Volcker, who was named as one of his White House observers. And Obama came in with the same mantra as we saw from Bush, urging a global financial overhaul. Paul Volcker basically said part of his role is to help mastermind, and that is a great term, what could become the biggest overhaul of the U.S. financial system in decades. And let me say, not only the biggest overhaul of the U.S. financial system, but the biggest overhaul of the structure of the American government in our history. There have been many books that have been written. This one I happen to have in my library called Rethinking Bank Regulation. Look at that, Till Angels Govern. I don't think I agree with that, but the truth of the matter is the present situation that is occurring right now really goes back a very long time. This is not a plan that's only 5 years old or 10 years old. This is a very long overdue plan. Does it go back to the beginning of the central banks in 1600? Well, that's a matter of discussion. I don't think we can know that, but the truth of the matter is we are at a culmination point in history in which it goes back several hundred years. Many think the world is ruled by governments. The Federal Reserve lends newly printed money to the commercial banking system of the United States. Thus, the balances on all bank loans, mortgages, and credit cards are ultimately owed to the Federal Reserve. Think about that. Many think the world is ruled by governments. Central banks, which collectively control money worldwide, are using chaos, credit, and debt to finalize their conquest. If and when our government and other governments no longer govern their banking systems, then the central banks will have total control and rule the world. How did we get to a place where governments no longer rule and the people no longer have representative government? Follow me. First, complexity. The credit crises we face in the financial markets has many novel effects, largely arising from the complexity and sophistication of today's financial institutions and instruments and the remarkable degree of global financial integration that allows financial shocks to be transmitted around the world at the speed of light. That was Ben Bernanke, October 15th, 2008. Banks are interwoven. The unfolding of the crises has shown how completely banks were interwoven with all elements of the system, the financial system worldwide. Banks were the main transmission mechanism that spread the credit crises across borders. Well, I would like to explain to Mr. Davies that I'm not that stupid to think that not only was there a transmission mechanism, but that there was a planned agenda to accomplish the fact that if you take the top largest banks in the world and they stop buying paper, bonds, different forms of paper that they sell and offer between one another and in the market, that if they stop buying each other's paper, they could create a credit crisis. And Mr. Davies went on to say, banks are at the center of everything that has gone wrong over the past 18 months, and that needs to be fixed. Well, that leads us to the fact that there is like a web of banks that already are in control of the world. And he goes on, therefore, banks could have caused the main problem in the first place and the need for global regulations. When we start taking a look at the Group of 10 global banking network, There are 33,101 banks in the group of 10 countries. That would be the United States, Canada, Germany, Japan, Italy, France, Great Britain, Luxembourg, and the Benelux countries. And so that's where you get the G10. There are 337,406 branches. So therefore, we have a pretty large system that rules the world in and of itself through the banking system. The world's largest banks: UBS in Switzerland, Barclays in London, BNP Paribas in Paris, Citigroup in New York, Hong Kong Shanghai Banking Company in London, the Royal Bank of Scotland in Scotland, Credit Agricole in Paris, the Mitsubishi Bank in Tokyo, the Deutsche Bank in Frankfurt, and Bank of America. When we start taking a look at here in the United States, the number of banks that we have 1,585 national banks. We have 874 state banks. And then we have something called non-member banks, 4,744. And then we have savings banks, 1,227, for a total of almost 8,500 banks. Non-member banks include banks like Merrill Lynch Bank, that's for their credit card, GMAC Automotive Bank, Nordstrom's, GE, GM, Target, Sallie Mae. These are all what they call non-member banks. What this really means is they are not under the auspices or the control of the Federal Reserve. So what is the goal here? To bring all banks, all types of banks, under the control of the Federal Reserve. So the non-member banks, 4,744, they want to move them under the control of the Federal Reserve, along with state banks, state chartered banks. So where are we now? And how did we get there? Let's do an overview. The world before Bretton Woods 1, what happened at Bretton Woods 1, the world since Bretton Woods 1, the current environment, the credit crises, the Treasury blueprint, and Bretton Woods 2, a global financial regulatory system. So the world before Bretton Woods 1, real simply, every country was its own. They had barriers between the countries. They were national, and they didn't have, if you will, free trade. And free trade is a misnomer. I could spend a long time talking about free trade. It is not free. It has nothing to do really with trade. It has to do with control. So when we start taking a look at where the countries were, they were called individual nation states, and they had barriers that separated them from all the other countries of the world. We're going to take a look at timeline of events. When we take a look at 1609 to 1913, we have the creation of a central bank system worldwide. Long before the barriers fell, powerful and greedy men were planning to control the monetary system of the world. They formed a private corporation known as a central bank that would lend money to the government. The loan would have no fixed period for repayment, allowing the interest to accrue without ever ending. So they were creating a bank for perpetual interest, usury, debt-based lending. They who control the central banks of the world control the world, its governments, and its people. Here we have Prince Edward, otherwise known as Edward Wessex. And I'm very grateful to him as a one-time movie producer. He produced a series called Crown and Country about all his ancestors. And I had always suspected that the British royal family were one of the major stockholders in the Bank of England, and maybe even the Federal Reserve Bank, as well as all other central banks that came maybe after the Bank of England. And he verified it. He talked about his forefather, King William II, who was the largest investor in the Bank of England with £10,000 investment of the 1.2 million pounds raised. Here's an actual document So thank you, Prince Edward. So we have a number of central banks in the world that have been around for a while. The first central bank began in Holland. Then the second one was in Sweden in 1688, the Bank of England, and then a number of other banks that brought us up to 1882. However, in December 24th, 1913, the Federal Reserve Bank here in the United States was formed. Now, I think it's very important that we take a look at the organizational chart of the United States from 1776 until December 23rd, 1913. We had the Constitution, we had the legislative branch, the executive branch, the judicial branch, and part of the executive branch was the Treasury. When the Federal Reserve Act was passed, there was this other entity that started to have control over our government. Passed on December 24th, 1913 at 11:45 p.m. by a small group of greedy senators after their opposing colleagues went home and recessed for the Christmas holidays, the Federal Reserve Act shifted responsibility for America's finances from Congress to a private corporation. The U.S. government and its taxpayers are in debt to this private corporation. This private corporation prints money on demand to lend to the U.S. government in the form of Treasury bills, notes, and bonds. Because it prints money on demand rather than having it in their vaults, this is, again, debt, usury, and it is their basis for lending, and the American government has been pretty stupid to agree to paying interest on money that the central bank never ever had to begin with. So what is the result of debt-based lending? The taxpayer is paying interest on money that the banks never had. And they printed it. That's a pretty good scheme. All of us would like to do that with our own finances. Every central bank issues their own currency. And if you take any amount of money out of your wallet, it'll say Federal Reserve Note. The Federal Reserve in Washington, D.C., does not pay taxes, and it does not issue annual reports. No one knows who the private shareholders are. There is no public record. The empowerment of the Federal Reserve, the Federal Reserve Act has been amended over 195 times. In the last couple years, in 1999, it broadened the range of discount loans and types of collateral it would take. And then in March of 2008, isn't this interesting? They agreed to take mortgages as collateral. Very important for what we saw with Fannie and Freddie. The Federal Reserve and the Treasury created a $30 billion line of credit for J.P. Morgan to buy Bear Stearns. It was the first time since the Depression that something like that happened. It has worked with central banks on coordinated rate cuts. It has extended liquidity to other central banks. That's so that they will have enough dollars. In September 8th of 2008, the Federal Reserve took control of Fannie Mae and Freddie Mac, $5.4 trillion. With the credit crisis, the Federal Reserve powers are being greatly expanded. The Federal Reserve will be greatly enhanced by the transfer of wealth in the Treasury blueprint. So here we have 1913. So what happens now? Everything is starting to get hazy as we have continued to increase the power of the Federal Reserve. We then have, in 1930, an organization was set up called the Bank for International Settlements. Carroll Quigley, who was Bill Clinton's mentor at Georgetown University, wrote in his book, Tragedy and Hope, the powers of financial capitalism had another far-ranging aim, nothing less than to create a world system of financial control in private hands able to dominate the political system of each country and economy of the world as a whole. This system was to be controlled in a feudalistic fashion by the central banks of the world, acting in concert by secret agreement, arrived at infrequent private meetings and conferences. And I say to you, what is the number one evil in the world? It goes back to the Garden of Eden. It wasn't when Eve ate the apple. Very simply, it's deceit, deception, and distortion. Carol Quigley goes on to say the apex of financial capitalism was to be the Bank for International Settlements in Basel, Switzerland, a private bank owned and controlled by the world's central banks, which they themselves were private corporations. So when we start taking a look at the world, we see a situation whereby all the central banks of the world look up to and are members of the Bank for International Settlements. Let me just say, as a freelance reporter, I've had the opportunity to cover, 6 or 8 annual meetings at the Bank for International Settlements. The only way that you can go to the Bank for International Settlements is if they invite you. And they only have one time in which reporters can go to the bank, and that is at their annual meeting in June. 1933, Keynesian economics. So what happened at Bretton Woods? Bretton Woods really covers a time from 1944 to 2009. So what happened at Bretton Woods 1? First of all, it was the culmination in 2.5 years of planning for post-war reconstruction. And I point out that it was the U.S. and the UK treasuries that were in charge of it. The architects were from the U.S., Harry Dexter White, and from the UK, John Maynard Keynes, the father of Keynesian economics. Here is a picture of these two architects. Now, what did they want? They wanted exchange rate stability. That's what they basically said. Interesting, we've never had it, have we? And they wanted the dollar to become the strongest currency in the world. It also created 2 international organizations called the International Monetary Fund and the World Bank. John Maynard Keynes had suggested that there be a global currency called Bankcore. That did not fly. The dollar as world reserve currency did. So, what does that mean with the dollar being the world reserve currency? And we are on the precipice of that being changed. It really means that a large amount of US dollars were held by many governments and institutions as part of their foreign exchange reserves. It was the international pricing currency for products such as the trading of oil and gold, all priced in dollars. And that is in the process of being challenged as we speak. The World Bank and the World Bank Group, what did they do? Well, they set out originally for reconstruction to rebuild war-torn Europe, and then for development of various countries. Robert McNamara, who was our Secretary of Defense during the Vietnam War, ended up becoming the president of the World Bank in the mid-1970s. Yeah, that was really bad. He did a lot of evil things, and that's why his middle name is S for strange. And one of the things that he did under his tenure was he forced third world countries into a financial plan in which they had to build projects that the World Bank said they needed to build, end of story. And of course, they had the financing available for these third world countries. The sad thing is that 80% of these developmental loans ended up becoming white elephants, leaving many countries in a position which is now known as highly indebted poor countries. How's that? HIPC, H-I-P-C, highly indebted poor countries. Oh yes, the size of the bank doubled. What does the World Bank do today? It lends to countries. It promotes economic activity. It has its own Wall Street type of operations where they set up offerings of global bonds, and they have established stock exchanges in most of the third world countries. Oh, let me tell you about what they do. Whenever they set up a stock exchange in a third world country, you have to have some stock to put on the exchange, right? So they make the countries privatize their holdings. Many countries might have they might have control of their own banking system or their telecommunications, their telephone system. And so what they do is they end up privatizing it, listing it on the new exchange. And guess what? You won't believe this. The World Bank, to help out, buys up to 25% of the newly issued stock. Isn't that great? And then, to help with the risk, they have MIGA, which provides insurance to foreign investors so they won't lose any money. Lastly, it is a major proponent of sustainable development. The International Monetary Fund, set up in 1947, was to be the keeper of the rules and the main instrument of public international management. We're not going to go into that one. We're just going to take it by word. It lent to countries in need. In 1969, the IMF created the special drawing right, which is a basket of currencies. Now, it was created in 1969. It was used by the IMF as a unit of account. The basket of currencies, every 5 years they change the basket of currencies. 2 years ago they changed it, and we now have, the basket is comprised of 44% of the US dollar, 34% of the euro, 11% of the yen, and 11% of the pound sterling. At one time it did have the Swiss franc. It has been adopted by the Bank for International Settlements in 2003. I was at the BIS at that time, and I did an interview with one of their economists, and I said, what is the reasoning for you changing from the Swiss franc to the special drawing right? And if you want to believe what he said, he told me that it was really just an accounting measure, that's all it was. Well, I beg to differ with him. When the Bank for International Settlements, which is the central bank's bank of all the central banks in the world, adopts the special drawing right, I almost think that we're looking for a global currency called the special drawing right, in which maybe they might even, after the credit crises, add an element of gold to it. The IMF today works with the World Bank on a broad array of financial arrangements. It created the Monetary and Capital Markets Department in 2007. It created global surveillance. It also has country surveillance, and believe me, every country is constantly and continuously being examined by World Bank auditors. And it has a financial system stability assessment report. The United States is in the process of getting our financial system stability report from the World Bank. So stay tuned in your television. So where are we? Where's the world since Bretton Woods? Well, this is what the countries used to look like. They were independent. They had a number of barriers, whether it was economic or political or trade or legal or military or intelligence. They had a number of things that were done called the International Financial Architecture to change it between 1995 and 2008. And now we see that it is the regulatory barriers that have to be torn down. Every time they tore down a barrier, they established an international level above the countries of the world. In 1944, it was the IMF World Bank. In 1945, it was the United Nations. In 1994, it was the World Trade Organization. In 1998, it was the International Criminal Court. In 2001, it was the military and the intelligence that was torn down. So what do we have? When there are no barriers between the nation states, it basically allows for a powerful group of people to control the world from above. That's what we're talking. Who are they? They are the bankers, both central and international. So let's take a look at the final barrier. And it is this regulatory barrier here for all the regulatory barriers between the countries to go global. Now, in order for this to happen, you have to create a major problem. Now, I'll tell you very honestly that I wasn't aware of the fact up until 2008 that the regulatory barriers had to be torn down. And that is because I knew that there were other entities that they had sent up in 1999 to start a global regulatory surveillance of the world. And so I had assumed that the regulatory barriers were down. But no, there was more to it. So you create a global credit crisis. Now, what will help any global credit crises? In 1971, Nixon took the dollar off the gold standard. It was the death of the dollar, August 15th, 1971. Before that time, you couldn't really mess around with the value of currencies because they were supported and backed up by gold. So what happened when Nixon severed gold from being part of the dollar is that it allowed currencies to float against one another. In other words, it was possible to play with the currencies. For the first time in the history of the world's monetary system, it was not based on a tangible. No accountability with a floating system. Money can be printed and reprinted upon demand, thus expanding money endlessly. Since 1971, the dollar has dropped against the Deutsche Mark, which is no longer, it's now the euro, and the yen, anywhere from 66 to 70%. So we're starting to see a number of things happen. The 1980s were very crucial with the savings and loan crises, a law passed by Carter called the Monetary Deregulation Act, and then the tax cuts of Reagan. So let's follow through as we start taking a look at the different things that happened during this time. First of all, the savings and loan crises. The total cost to the U.S. taxpayer was $124.6 billion. Now, at the time, we thought that was a lot of money. We're now looking at $11 trillion for the current crises. Hello? We had the Lincoln savings and loan crises with the Keating Five. 5 senators received $300,000 in political money. Senator Glenn and McCain were rebuked, and 3 lost their seats. In 1989, they established the Resolution Trust Corporation to dispose of failed thrifts and their properties. Today we call them toxic assets. There was no accountability to Congress, and today they're looking to set up public-private partnerships to do the same thing. The Resolution Trust Corporation closed 747 thrifts with a value of $394 billion. They pioneered something called equity partnerships or limited partnerships. We then had the Monetary Deregulation Act passed by Jimmy Carter. The Monetary Deregulation Act permitted banks and savings and loans to charge going interest rates according to what the market was bearing. So what it really did was it eliminated a law that said banks had to pay you a minimum of interest on your deposits. So that is why we have, since 1980, the ability for banks to charge 35% interest on credit cards, or up to 35% interest, and pay 0.25% or less on savings. You know, and they're talking about how do you get people to save? Well, people didn't want to save in the bank. The bottom line is they didn't want to save in the bank because they would get a pittance. So many people took more risk and went into the stock market. The result? During Paul Volcker's tenure, the Fed was stripped of its ability to constrain debt expansion when it enacted the Monetary Deregulation Act of 1980. So in other words, the Fed started to change what they could do to rein in inflation. And this is from Secrets of the Temple from William Gradier. He said, "The only restraining influence you have left," a senior Fed official complained, "is interest rates. Restraint which ultimately works by bankrupting the customer. It obviously hurts people more." Are you feeling the shift here? because the shift gets harder and heavier with the Reagan tax cuts. Reagan passed 7 major tax laws in 8 years. In 1981, he passed IRTA. It was the biggest tax cut and change in 35 years. In 1982, he passed TEFRA, which was the biggest tax increase. In 1986, he passed TEFRA, TRA, Tax Reform Act. What did the Tax Reform Act do? The top tax brackets were reduced. The lower tax brackets increased. You feel the pain yet? The capital gains taxed ordinary income. And the interest deduction on credit cards, consumer loans, was no longer deductible. So, what did that do to the taxpayer? Taxpayer was straddled with the cost of savings and loan bailout. The banks changed the rules. No minimum interest on savings. And Reagan changed the interest deduction to mortgage and lines of credit, shifting the risk and the tax deductions to the residence, the home. So what did people do? They followed where they could get the tax deduction, and they put their homes at risk. William Gradier said, the 1981 tax legislation proved to be regressive. It became the pretext for a vast redistribution of incomes flowing upward on the income ladder. Now, Obama says he's going to change this. Does anybody want to hold their breath and see? Gradier said, rather than saving, it was more accurate to say Reagan's economic revival was powered by debt, living on borrowed money. So what does that really mean for today? If you take a look at the debt created in 1933, if you take a look at the Reagan economic revival, if you take a look at Obama, we are in the process of being powered by debt and more debt, and that will become very clear. Gradier said it was borrowed and spent by the federal government, by businesses, and by consumers. As the recovery proceeded, an increasing portion of the accumulating debt was borrowed from abroad. According to Fed Government Charles Partee, he said, there's been quite a lot of redistribution of income toward higher income groups. It requires consumers to accumulate more and more debt. Taking a look at the Asian crises. Many people really haven't thought about the Asian crises. Let's take a look at what happened. In a matter of days, the currencies of 5 countries were decimated. Thailand, Malaysia, Japan, Philippines, and Korea. They did not want to join the World Trade Organization Financial Services Agreement. I happened to be at a World Bank meeting back then, I think 1998, and Malaysia felt so bad about what happened to their country, they did a special meeting. And so I squeezed in a question. Reporters aren't supposed to ask questions, but I wanted to put it on the table. And I basically asked the 2 key people who were conducting the meeting if they felt the fact that the 5 countries involved, that they did not want to join the Financial Services Agreement, if that had anything to do with their currencies being decimated. And they did not touch that with a 10-foot pole. So I thought I would stick around and ask them after everything was over. And this man came up, we happened to start, our paths started to cross as we were both making our way up to the front. And he was from Asia. And I've seen him at various meetings. He is a major mover and shaker. And he said to me, that was a very perceptive question you asked. When you have paper currencies, it gives the central banks the ability to rein in the countries by selling their currencies. That's exactly what happened. These 5 countries were punished in a very severe way within a matter of days. All the central banks sold their currency and desecrated their economies to teach them a lesson. For the first time since the formation of the G7 then, in 1975, as a result of the Asian crises, the G7 central bankers began to meet with the G7 Treasury secretaries because they felt that they needed to all be on the same page. Very, very important because, the Federal Reserve and the central banks of the world had always been in the background. And then as a result of the Asian crisis, you start seeing little by little these baby steps of the central banks becoming more and more dominant and powerful. So who runs the world? Well, I'll be honest with you, the Treasury secretaries, and you'll see in a few slides that the Treasury Secretary here in the United States is now an agent of change, but you see it's the central bank ministers. They are the ones who call the shots. So we have the Asian crisis, and then in 1999, we had the repeal of the 1933 Glass-Steagall Act. It was a time of great change. The trade barriers were eliminated globally through the WTO and regionally in 1994 through the free trade areas of the Americas. The Asian crisis was to teach countries obedience, and it was also to send a message to all other countries who might buck the system. In 1995, Congressman James Leach started pushing for the repeal of the Glass-Steagall Act. It was repealed in 1999. This very naive reporter in, I don't know if it was 95 or 96, I was at a meeting in which James Leach gave a keynote speech on why we needed to tear down the barriers of the Glass-Steagall Act between investment banks and commercial banks. And so I raised my hand and I challenged him. I didn't know I was challenging him. And I said to him, Congressman Leach, is it not true that Glass-Steagall was put in place to protect us from ever having a 1933? Well, he didn't want to answer that. I clearly embarrassed him. And when the lunch break came, and everybody went to lunch since I wasn't part of the meeting, I was just a lowly reporter, in the afternoon session they wouldn't allow me back in. Anyway, so you live and you learn. What did the repeal of the Glass-Steagall Act do? It called the Graham-Leach-Bliley Act. First of all, it allowed foreign banks, insurance companies, and brokerage firms to buy U.S. banks, insurance companies, and brokerage firms. It tore down all protections between investment and community banks, and it opened the door to create the need for global regulation. So are we starting to see what's going on? Yes, it did set the stage for today's crises. So the 2008 credit crisis, it created chaos. Then there were calls for global coordination. Sarkozy calls for revamping of the capitalistic system. And right now, even Mikhail Gorbachev has chimed in on the need to change capitalism and socialism. And, I've been privy to many discussions on the international level where they talk about the merger of capitalism with socialism being called sustainable development. Anyway, German Chancellor Angela Merkel said, a new acceptable architecture of the financial markets can only be drafted together. So little by little there's been this drum beat about how we all have to work together. President Bush said in 1108, we live in a world in which our economies are interconnected. Financial turmoil anywhere in the world affects economies everywhere in the world. David Faber, almost fell off my chair, from CNBC on 11/14 said, is the New World Order around the corner as the G20 meets? Question, is the New World Order a world in which central banks will rule? Let's take a look at the power of the Bank for International Settlements. We took a look at the BIS a little while ago. And it's very interesting. They work very closely with the world's insurance supervisors and the world's stock exchanges. So you literally have all levels and areas of finance all connected to the Bank for International Settlements. The organizational chart of the Bank for International Settlements, it has the Committee on Banking Supervision, the Committee on Payments and Settlements, the Committee on Bank Governance, and the Committee on Global Financial Systems. Basically, this mirrors the Treasury blueprint. And what do we have? Two of our Federal Reserve chairmen chaired the Committee on Payments and Settlements, Donald Cohn, and then Timothy Geithner, before he became our Treasury Secretary, chaired the Committee on the Global Financial System. There have been a lot of discussion in the Financial Times, which is a newspaper I subscribe to. Is it time to turn the BIS into a global central bank? We have seen since 2007 the rise of the central banks, with the Bank for International Settlements, with all the central banks of the world coming to bail out one another and the United States. And so we've seen this movement. All of this sets precedents for the rise of a global central bank. Now, one of the things that happened in 1999, they not only repealed the Glass-Steagall Act, but they set up something called the Financial Stability Forum. And 1999 was a pivotal year. It set the stage for global regulatory structure. It repealed the Glass-Steagall Act. And the Financial Stability Forum was set up at the BIS. I was at the BIS the year the Financial Stability Forum was set up. And I did a number of interviews with the managing director of the Financial Stability Forum. I just want to point something out when we start taking a look at little baby steps. We had the Financial Stability Forum in 1999, the International Organization of Insurance Supervisors in 1998, and the International Association for Depositor Insurers in 2002. Do you think that they knew what they were doing? And here they are setting it all up, little by little, step by step. This is a flow chart for the Financial Stability Forum. For the first time, it would bring together G7 central bank ministers, G7 treasury secretaries, and global regulatory bodies. For the United States, that would be the comptroller of the currency, the FDIC, and others. This had never happened before. And so when I thought all the barriers between the countries were down, it was because the Financial Stability Forum had been set up. And I asked Mr. Swine Andresen in 2001, what is the purpose of the Financial Stability Forum? He said, it works to detect vulnerabilities earlier and make sure something is done to address them and shore up defenses. Generally, there is no guarantee that it is going to protect the system, but the efforts go in this direction. How's that for being sure of what they're doing? In 1999, the first time I interviewed him, I said, what is the role of the regulatory agencies in the Financial Stability Forum? And he said, the U.S. probably has the most diverse regulatory structure there is. It is very complex. The U.S. has a very antiquated regulatory system. Well, no, we don't have an antiquated regulatory system. It just doesn't match with total control. Why is that? We have 8 separate regulatory agencies. We have the SEC, regulates the securities industry. The Federal Reserve controls the banking and financial system. The Office of the Comptroller of the Currency oversees federally chartered banks. The Federal Housing Finance Agency oversees Fannie Mae, Freddie Mac. The state insurance departments, as I mentioned earlier, oversees the insurance industry of their state. The Office of Thrift Supervision oversees thrifts. The Futures Trading Commission oversees futures, options, and derivatives. And FDIC ensures your bank deposits. So both Obama and the blueprint, Henry Paulson and Bush, will put all of these agencies under one roof with accountability and control to the Federal Reserve. Does anybody understand the agenda here? Let me just show you the pre-blueprint. If you take a look at the diagram on the left, you have the U.S. government in charge of credit unions and state banks. Actually, it's the states in charge of insurance, but it's out of the the other one. Mortgages, nobody controls mortgages. The payment and settlement system is controlled by Wall Street. And then there was something new called the Market Stability Regulator, that they want to make the Federal Reserve this new entity that will control the market. And what happened is that the blueprint said the Federal Reserve has to control the credit unions and the state banks, the insurance industry, the mortgage industry, the payment and settlement system of Wall Street, and become a market stability regulator. In other words, this is a major, major shift of all the assets of America that are not directly under the Federal Reserve control to be shifted to the Federal Reserve. The blueprint and Obama's plan are the same. They've changed, tweaked a few things, but they're both the same. The blueprint transfers to the Federal Reserve the last vestiges of our economic sovereignty that they currently do not have control over. With the passage of the blueprint by Congress also comes a global regulatory structure. They just threw that in for fun. There is new change in Washington. It's a complete structural change, and it's not Obama. Excuse me, Obama doesn't have the power that the central banks have. He's just, like all the other ones, a tool. All right, so we're now going to talk about structural change number one. The Federal Reserve and Treasury take the lead, leaving our lawmakers out of the major decision-making process, setting precedents. You may remember, in September 18th, 2008, the Washington Post had this amazing article, "Lawmakers Left on Sidelines as Fed Treasury Takes Swift Action." Lawmakers on both sides have expressed concern yesterday that they have had no control over when and how federal money has been used to curb the panic on Wall Street. Congressional leaders learned of the AIG rescue late Tuesday evening during a hastily called meeting in the Capitol with Bernanke and Treasury Secretary Paulson, who explained the deal after it was done. This article appeared in the Financial Times in March of 2008, and it said the 4 new sheriffs on Wall Street. We have 2 Federal Reserve chairmen and the then Treasury Secretary Paulson and Steele, who's no longer, well, neither of these 2 are, but anyway. Geithner was at that time the Federal Reserve chairman in New York. Paulson and Bernanke have taken the lead not only from lawmakers but from President Bush. Bush has left direct management of the crises to them and other advisors and has limited his public remarks on the economy. On Tuesday, he canceled his plans to brief reporters after meeting with his economic advisors. In other words, monetary control is now the responsibility of the Fed and Treasury. Structural change number 2. The position of Treasury Secretary is now as a facilitator and change agent, with central bank minister of the transfer of U.S. assets to the Federal Reserve. So let's take a look at constitutional government. The President, the executive branch, Congress, and we the people. A precedent has been set for a new structure. The Federal Reserve and Treasury, and then the President, the executive branch, and Congress. So we're starting to see that there is a new order of power. Let's take a look at some previous change agents. Paul Volcker, Robert Rubin, Larry Summers, Hank Paulson, Timothy Geithner. Paul Volcker joined Treasury in 1962. He served as Under Treasury Secretary for International Affairs. He was then President of the Federal Reserve. People didn't like him. He only served a partial term of 4 years. He was Federal Reserve Chairman under Carter and Reagan. He played a key role in the decision to float the dollar. He was then Chairman of J. Rothschild and Wolfenson and Company. Any alarm bells going on? He was Chairman of the Group of 30. He was a founding member with David Rockefeller of the Trilateral Commission. He graduated from Harvard and went 1 year to the London School of Economics, a Fabian socialist entity. I interviewed him in September of 2004. I said, in 1974, when we had the currency crisis, you run around the world looking for a new mechanism, a new way for the world. He didn't even let me finish. Yeah, right. When you look at the world today, what do you see based on what you set up? I think we need a new mechanism. We didn't set anything up very successfully, which meant he should have been fired. Robert Rubin came from Goldman Sachs. He was 26 years at Goldman Sachs. He was the 70th Treasury Secretary under Clinton. He created the $20 billion Exchange Stabilization Fund with Greenspan during the Mexican crises. That Exchange Stabilization Fund is very busy nowadays with our market. He was dubbed with Larry Summers and Greenspan as a committee to save the world. He co-chairs the Council on Foreign Relations, an organization looking to bring the world under British rule. Larry Summers, he entered MIT at 16, child protege. Chief economist at the World Bank for several years. Treasury Deputy Secretary under Robert Rubin. Treasury Secretary 1.5 years after. In 1999, he opposed the regulation of derivatives with Greenspan and Rubin, which led today to the current crises. He is seen as a Bernanke replacement whenever that happens. Hank Paulson, the 74th U.S. Treasury Secretary, CEO of Goldman Sachs. He joined in 1974. He sold his shares tax-free for $2 billion when he became Treasury Secretary. You know, that's not bad change, is it? Tax-free. As Goldman Sachs CEO, he got the Secretary to release major investment banks from the net capital rule, contributing to some of where we are today. He created an $85 billion bridge loan for AIG. He nationalized the U.S. banking system. Timothy Geithner, he worked for Kissinger and Associates. He was U.S. Treasury for International Affairs, served under Robert Rubin and Summers. He's a Rubin protege. He's a senior fellow on the Council on Foreign Relations. He was with the IMF, Director of Policy Development and Review, President of the New York Federal Reserve. He was on the board of the directors of the Bank for International Settlements. And as I showed earlier, he was head of the BIS Committee on Global Financial Systems. So what are some of the things that we have with regard to our Treasury Secretaries? First of all, it's become a position of change agent. There's a pattern: Treasury, IMF, World Bank, Fed. Some are CFR and trilateral. 2 are Goldman Sachs, international banks. Rumored, by the way, to be Goldman Sachs and several of those others international banks are rumored to be part of the owners of the Federal Reserve. Structural change number 3. Destroy the value of currency and increase the use of credit to capture a country and the world. So how did we get into debt? Well, in 1913 we had the Federal Reserve Act. In 1933, Roosevelt closed the gold window. In 1971, Nixon closed the gold window to countries and opened the door to unlimited credit. In 1950, we had the Diners Club card. 1958, American Express. In 1958, we had the first mass mailing of credit cards. In 1980, the Monetary Deregulation Act, which we discussed. In 1984, J.C. Penney's issued their credit card. In 1986, we had the Discover card. And then we had the Reagan changes in tax deductions for autos, credit cards, home loans, and now the home equity lines of credit. Just roll it into your house. So, you know, that's enough to get anybody in trouble. The anatomy of debt. They created derivatives, CDOs, and exotics to flood the system. They passed the 1994, 1998, Clinton passed the Community Reinvestment Act, geared to put every poor person in their own house. In 2001, we had 45-year low interest rates, which created the mortgage bubble. I mean, they knew exactly what they were doing. In 2008, we had the stimulus plan. 2008, we had a bailout. We now have the second stimulus plan in 2009, and we're on our second bailout in 2009, probably going to our third. So what did Keynes say? He said, deficit spending is the way to get out of the Great Depression. Well, the truth of the matter is, when we take a look at our debt, the Great American Debt Bubble, it has almost doubled from 1929 to 33. It went down, and from the 1944 low to 2004, it increased 200%. U.S. public debt went from $65 million in 1860 to, under Reagan, 1980s to 90, from $930 billion to $3.2 trillion. And 2008, we're at 10 trillion, or 72.5% of GDP. Foreigners own 25.24% of our debt. China first, Japan second, UK third, Caribbean fourth. However, I suggest to you, if you add the UK and the Caribbean, because the Caribbean is part of the Commonwealth, Britain has more debt. The Great American Bubble, our domestic financial debt, 14 trillion. We're looking at a total of U.S. financial and non-financial debt of 44.7 trillion. It has risen 18.59% a year for the past 34 years. From 2001 to 2007, the debt explosion, outstanding foreign mortgages, outstanding foreign debt, 104%, it's up by 104. Outstanding home mortgages, 102. Outstanding domestic financial debt, 71. Annual U.S. current account deficit, 104. Structural change number 4, the rise of the Federal Reserve in power over the economy and Congress. This was in the Financial Times, the first of the 2009. Since October 2008, the U.S. Central Bank has pushed deep into unconventional territory, creating money on a gigantic scale to expand credit operations, aimed at reducing actual borrowing costs, including outright asset purchases. This article in January of 2009, Fed may gain more financial oversight. It said, Congress is moving to create strong new oversight of the financial sector that would likely give the Federal Reserve authority to examine the workings of a wide range of companies in an attempt to address one of the key failures leading to the financial crises. Furthermore, the Fed to try additional unusual methods. The Federal Reserve yesterday indicated that it will pursue further unconventional steps to try to stimulate the economy as it left the interest rate that it controls essentially at zero. We learned a little while ago that with the Monetary Deregulation Act, the only leverage that the Federal Reserve has in our economy is interest rates. So they don't have very much leverage to, if you will, maneuver and fix. In November 26, 2008, the Washington Post had an editorial that said, "Buying time, meet your new mortgage banker, Federal Reserve Ben Bernanke." Do we understand the Federal Reserve, which was never created to lend and make mortgages and automobile loans and a whole bunch of other things, is now doing that? They are our new banker. Here's an article from the Financial Times. The world's central banks must buy assets. The world economy is trapped in a dangerous downward spiral of falling asset prices, rising bankruptcies, foreclosures, and unemployment. Well, guess what? When you create a credit crisis of the magnitude they have, that will happen. Structural change number 5. Continual cycle of increasing debt, adding more and more debt to the taxpayer. The TARP bailout. So let's take a look. The House approves a bailout a week later, October 2. Okay? The bottom line is, you will recall that there was a tremendous amount of activity around this bailout. Why? First of all, the market dropped 20% in September, and it dropped another 25% in October. And, when you have Nancy Pelosi going on TV and saying, if we don't do this, it may be worse. Well, what she was saying is that they were probably being told, if you don't do this, it will be worse. Let's take a look at what came out of TARP, Troubled Asset Relief Program. You had $40 billion given to AIG, $250 billion available to banks, and $350 billion which required congressional approval. So the president was given $100 billion, which he had. That was what he could give away. $125 billion went to large banks and $125 to small. And what happened? Paulson changed the rules and the terms. His authority is greater than Congress. So what did he do? He basically nationalized the banking system. He gave $125 billion to 9 major international banks. In addition, Bank of America got an extra in January, $20 billion plus $118 billion in guarantees by the U.S. government. Now, I want you to see something. Nobody's talking about derivatives. There have been a lot of people talking about when derivatives explode and pop. That's still not on the radar screen at this moment. Bank of America has $38.6 trillion in derivatives. Citigroup has $35.6 trillion. And JP Morgan has $87.7 trillion in derivatives. What's really happening is that all of the sins of these international banks, all of these exotic investments, you and I are going to pay for. So let's take a look at the lobbying fees that these banks received. Morgan Stanley received $5.8 million. Goldman Sachs, they didn't receive, they gave in lobbying fees for the financial industry. Morgan Stanley, $5.88 million. Goldman Sachs, $6 million. Bank of America, $16.4 million. See, so look at some of these numbers. Citigroup, $16.1 million. And JP Morgan, $10.9 million. Now I want you to see AIG. AIG is the major culprit. They have given the financial industry $21 million. Okay? AIG, the world's largest insurance company. The government lent it $85 billion with a 79.9% stake in September of 2008. In October of 2008, they increased the Fed loans by $38 billion. And then in November of 2008, they had new loans in terms of $150 billion. Now, in February, they want a total rewrite of their $150 billion loan with new terms. Does anybody have a problem with this? We, the taxpayer, are now responsible for $162.5 billion of AIG. The government is lending $70 billion, and the Federal Reserve will lend $92 billion. Guess who will have to pay the Federal Reserve? You and me. We just learned the other day that some of the money that AIG received was to retire credit default swaps, derivatives retirement, securities lending program. The states of California and Virginia received $12 billion. Goldman Sachs received almost $13 billion. A French bank received almost $12 billion, and a Deutsche Bank, a German bank, received almost $12 billion. Okay, so our taxpayer money is going to retire a whole lot of things. Does anybody understand that the taxpayer is not only bailing out AIG, but they are bailing out everyone that did business with AIG? That's really the bottom line here. So we have overwhelming problems and debt. The bank losses complicate U.S. rescue. A new wave of bank losses is overwhelming the federal government's emergency response as financial firms struggle with the souring U.S. economy, intensifying the pressure on the incoming Obama administration to allocate more of the $700 billion rescue program to financial firms. Why? They're in big doo-doo. In January, they were talking about looking to provide support for credit card, auto loans, student loans, small business loans, funding commercial mortgage-backed securities, and if needed, municipal bonds. We then had, when Obama came in, we had a two-front push. We had the stimulus program with a $3.6 trillion budget, and we had the bailout with a couple trillion. And Timothy Geithner, he had a rough beginning. in looking to answer, but he's become very smooth in the last couple weeks. And the numbers keep changing. 2 trillion here, 1.5 trillion there. So what is the new Treasury plan? First of all, they want to stabilize banks with the Financial Stability Trust at anywhere from 100 billion to 200 billion. Just recently, they announced under stabilizing banks, unlocking credit for small businesses, 15 billion. And then they have, under stabilizing banks, they have the public-private partnership, which is to replace TARP. Now, TARP was where we were going to buy the toxic assets. Now, Paulson then nationalized the banks. So this is the new program, the public-private partnership. So what do we have here with a public-private partnership? You have public and private in bed together in a business entity. You have government. You have the Federal Reserve, which is a private corporation. You have private investors, we don't know who. Where they meet is where they have the partnership, where they come together, and their whole purpose is to purchase toxic assets. Now, the Resolution Trust Corporation had no accountability. This is not going to have any accountability. The new Treasury plan, they have the Consumer Business Lending Initiative. This is called the TALF, T-A-L-F, which is the Term Asset-Backed Security Loan Facility. So what do we have? Credit cards, student loans, auto loans, and floor planning, commercial mortgage-backed bonds and municipals. And what is the source of funds? The Federal Reserve and the U.S. government. And we are responsible for both. The new Treasury plan for housing, $50 billion. So here we have Obama in February launching that. We've had continual, constant discussion about nationalizing or not to nationalize various banks and industries. So we're basically open at nationalization, or maybe we should call it socialization. So what are the Treasury responsibilities? Well, there's the new capital assistance program, there's the public-private partnership program, there's the TALF, and then there's the mortgages. What are the Federal Reserve responsibilities? Purchase agency debt and mortgage-backed securities. Today it was announced they will buy up to $300 billion in 30-year Treasury bonds, something they've never done before, and there's $750 billion for Fannie Mae and Freddie Mac. Are we in trouble here? There's the new lending facility, TARP. There's the term auction loan to fund banks. And we need to establish new lending facilities to support commercial paper to ease pressure on money markets. The truth of the matter is, the U.S. taxpayer is responsible for both. We're responsible for the Treasury debt, bonds, loans, and IOUs. We are responsible for the Federal Reserve debt, bonds, loans, and IOU. It is literally on our backs. And it's paying endless debt. Structural change number 6. Should I let that sink in a little bit? Structural change number 6. Congress no longer protects the pool of taxpayer money. This is extremely important. The total cost of the bailout as of March 2 was $11 trillion. Under Federal Reserve and FDIC, with lawmakers voting on only $780 billion, and that was under duress. Do we understand that? This is out of control. This was an interchange between Senator Bunning to Federal Reserve Bernanke in February. And this was in light of the Federal Reserve balance sheet expanding to $2.3 trillion as they buy all these various assets with America. Bunning. We do not have access to the TARP. Who has borrowed from the Fed and pledged collateral? Can you imagine? The senator did not know this. Who signed off on the original TARP loans? Did you approve these loans? Bernanke. That would be the Treasury. He was very dry that day. Bunning. Who approved the amount of money? Bernanke. The Treasury. I mean, our lawmakers don't even know who has the power. Now, this is what Bunning should have said. Let me see if I understand correctly. The U.S. taxpayer pays you interest on the money the Treasury borrows. Yes, would Bernanke would say. Bunning, where did you get the money that you lent us? We printed. That would have been more accurate. What are we saying here? We're saying the Federal Reserve has direct access to the $2.4 trillion in taxpayer dollars that are collected yearly. There is no longer any Congress to protect us from the wolves of the Federal Reserve. The Fed has now direct access to $2.4 trillion. The barrier, Congress separating the taxpayer dollars by the Fed and Treasury, the Fed and Treasury has now been torn down as of October 2008. We're seeing all kinds of things. I don't know what your newspaper reports, but this was in $3.6 trillion budget, Obama signals broad shift in priorities. We don't have time to discuss that. Obama predicts years of deficits over $1 trillion. Now, for people who think their money is safe in FDIC, at the end of the first quarter of 2007, all FDIC-insured banks had deposits of $4.2 trillion. And the amount of money in the depository insured fund was $50 billion. Do we understand that they only had $50 billion to protect $4.2 trillion in deposits? At the end of the third quarter, 2008, the amount of money in banks rose to $4.5 trillion, and the amount of money in the depository insured fund dropped to $34.5 billion. This is from their own documents. Global interdependence. David Dupuy, president of the board of a company that he owns, said in 2003, one of the problems we have is that we have a global world and a global market, but are still governed by national rules and national leaders. You cannot solve problems without international solutions. Timothy Geithner said in February of this year, President Obama is committed to moving quickly to reform our entire system of financial regulation so that we never again face a crisis of this severity. I bet they've said that every time they planned a crisis, whether it was 29, 33, the savings and loan, going on and on. President Obama said in a joint session of Congress, and to ensure that a crisis of this magnitude never happens again, I ask Congress to move quickly on legislation that will finally reform our outdated regulatory system. And Prime Minister Gordon Brown, who just addressed a joint session of Congress, said, our task, as if he was President of the United States, is to rebuild prosperity and security in a wholly different economic world where competition is no longer local but global and banks are no longer just national but international. And you are restructuring your banks, and guess what? So are we. He went on to say, so that the whole of the worldwide banking system serves our prosperity rather than risks. Let us agree to rules and standards for accountability, transparency, and reward that will mean an end to excesses and will apply to every bank, everywhere, all the time. It's called total control. Ron Paul said to Paul Volcker recently, testifying before the House on February 27th, that's 2009, Ron Paul said, so you think the system that we have today is over and done with, and we can't patch it together with more trillions of dollars by the Fed and more debt by the Congress isn't going to solve the problem? Paul Volcker said, I think there are problems with the present international monetary system that have not received sufficient attention. Make no mistake, this is a unique moment in economic history where the world is going on the basis of fiat currencies. Really? Amazing. This was done in 1971, and we had this crisis in 70. He went around the world in 73, and all of a sudden they just figured out we have a problem. What will we have? What will come out of this? global accounting rules, a global security and exchange commission, which will be the financial stability forum, and global regulations, the final piece needed to piece together total global integration and empowerment at the international level. Bretton Woods, 2. The global regulatory system. Well, all these geniuses came together in Washington, D.C. The Group of 20 is an expansion of the G7. The G7 is in the brown, and the other countries of the world, which basically control 80% of the world's assets, are in red. And you can see that they've included China, India, Indonesia, Korea, Australia, South Africa, Saudi Arabia, Turkey, Brazil, Argentina, and Mexico. So now we're seeing about all the things that they're going to do. The bottom line of Bretton Woods 2. They will come up with a global regulatory agreement. They will expand the G7 to the G20. It'll be the rise of the IMF with a key role as global oversight, rise of the global central bank, and probably some kind of global currency. If they wanted a global currency at Bretton Woods 1, everything that we're seeing today points to a global currency in a global world for Bretton Woods 2. They're going to expand the Financial Stability Forum from the G7 to the G20. So we have total integration financially, politically, trade, legal, military and intelligence, and now regulatory. The U.S. is a debtor nation to the Federal Reserve. Ask anyone who's losing their home. The Federal Reserve, why can't the American people forgive themselves the interest on the debt? It is owed to a private corporation. Senator Benton of Missouri said this: "The government itself ceases to be independent and safe when the national currency is at the will of a company." He was talking about the Federal Reserve. "All property is at their mercy. The price of real estate, of every growing crop, of every staple article is at their command. Stocks are their playthings." So we are being transitioned. We have the old world order, we have the credit crises, we have the G20, and we have the new world order when central banks rule the world. It is not our leaders who rule the world, but the central banks. Americans are in bondage to the Federal Reserve. The world is in bondage to the central banks. Bretton Woods 2 will be the transition to a total world government system where central banks rule. If anybody saw this movie, The International, if you didn't see it, rent it. It's worth it. When they were advertising it, they said, they control your money, they control your government, they control your life, and everybody pays. And so, the following is a little discussion. We have this bank, and I'm assuming it's a Federal Reserve, a central bank, and we have these two agents who are looking to figure out what's happening. And Agent Whitman says, "Why is the bank committing so much of its capital and reserves to the sale of missiles?" The weapons manufacturer says, "Small arms are the only weapons used in 99% of the world's conflicts, and nobody has the capacity to manufacture them faster and cheaper than China. What the bank president is attempting to do is make the IBBC the exclusive broker of Chinese arms to the third world, and the missile deal is the gateway." So another agent says, "Billions of dollars being invested to be a broker? There can't be that much profit from the sale of making small arms." The weapons manufacturer. "This is not about profit from weapons sales, it is about control." The other agent thinks she knows what she's talking about. Control the flow of weapons, control the conflict. He says, no, no, no. The IBBC is a bank. Their objective is not to control the conflict, but control the debt that the conflict produces. The real value of a conflict, the true value is in the debt that it creates. You control the debt, you control everything. You find this upsetting? Yes. But this is the very essence of the banking industry, to make us all, whether we be nations or individuals, slaves to debt.
Structural change number 7. There's pressure from the very top. Sir Evelyn, how do you like how they pronounce that? Evelyn de Rothschild, central bankers and international bankers, UK Prime Minister Gordon Brown, and other world leaders for global regulation. What will we have? The organizational chart going forward. The Fed as change agent, the Federal Reserve, total control. Global regulation will lead to the U.S. to adopt a value-added tax to pay for the bailout. A value-added tax will tax everything that currently isn't taxed. When you go to your barber, when you go to your attorney, when you go to your accountant, when your plumber comes, it'll be on manufacturing. Obama will come to us and tell us that it costs more than he thought. In a global world, there is a need for a global currency. If the dollar is replaced, it will not be a one-to-one exchange. There is also serious discussion on a global tax. So how should we respond? Cut up all your credit cards, control your spending, and learn to live within your means? Set a budget. Cut corners by limiting luxuries such as cable, entertainment, etc., and claim 2 Chronicles 7:14. If my people who are called by my name will humble themselves and seek my face and turn from their wicked way, then will I hear from heaven and heal their land. 2. List all your assets and liabilities. Pay down your debt using all assets if necessary. The less you owe, the less you will become a slave to the system. Work towards getting out of the banking system if possible. Pay off your mortgage through your assets or through private financing. Lay at the foot of the cross the evil system we are under as a nation and people. Ask God to deliver us from this evil. How should Congress respond? Break the bank. Congress needs to suspend interest paid to the Fed as the first step. How should states respond? They need to coin their own currency. Lastly, we talked in the first video called 21st Century Sustainable Feudalism about the fact that in a feudalistic system you have a king, and what we're saying is, and what I showed in that video, that there's been a merger between the power and money system of the world, the British royal family and the Rothschilds. There is the manor where they live, and it appears that it's all of creation. There's the tenants-in-chief, the CEOs, the presidents, and the prime ministers. That's the higher level of their caste system. And then there's the serfs or the villeins, which are you and me. And homage, you will pledge homage to the Queen and reunite the U.S. and Britain. We showed a power structure. I called it the Knights of the 21st Century Round Table. As I mentioned earlier, there's been a merger between the British royal family and the Rothschilds. I don't know if you know this, but Diana's mother was a Rothschild, which means Prince William may be the first Rothschild to sit on the British throne. Nathan Rothschild said, "I care not what puppet is placed on the throne of England to rule the empire on which the sun never sets. The man who controls Britain's money supply controls the British Empire, and I control the British money supply." He also, President Esser, in Pan-American Germanism in 1913 wrote, "Russia, Turkey, Egypt, India, China," that's part of the G20 by the way, "Japan and South America are probably owned as far as any nation can be owned in London or in Paris. The world itself, in fact, pays them tribute. It actually rises in the morning to earn its living by utilizing their capital and occupies its days in making the money to pay them interest, which is to make them still wealthier." He said this of the Rothschilds. How about that? In conclusion, we have to do what the children of Israel did when in bondage to the Egyptians. That is, cry out to God. In conclusion, it continues to be apparent that Congress is captive to the Treasury and Federal Reserve. Therefore, we, the people, have nowhere to go and must cry out to God. Thank you.